Hey, what's up everyone? Welcome back to a brand new video. This is episode 3 or volume 3 of the Optimal Trade Entry series. So in the previous 2 episodes, we have been talking about a very specific time window, which is 8:30 to 11 a.m. New York time. Typically is when you'll see the Optimal Trade Entry day trades form. So if you focus on day trading, you'll be able to find these setups on anywhere from 8:30 to 11 a.m. New York time, and you are typically targeting either previous daily highs or previous daily lows, and so in the form of anywhere from buy side liquidity, sell side liquidity, or maybe you're targeting a fair value gap. You're targeting the buy side liquidity beneath a fair value gap, or you're targeting the sell side liquidity above a discount fair value gap. So if you are into swing trading or position trading, this model can also be applied to that type of trading. It's not specific to just the day trades from 8:30 to 11. You can use this on any time frame. Price is fractal. A lot of you guys may know that. But what does it really mean when price is fractal? It just means that the markets are always trading from discount to premium, premium to discount, and that's pretty much what they always do. So how the way markets book and the way markets are priced is they are moving from a discount up to a premium and from a premium down to a discount, and that's just how the algorithm collects all the orders, and that's how we get these markets. So if we focus on a daily time frame, I gave this signal out publicly on Twitter, and these on the Telegram channel. I've been giving out these signals here, all real time, all live trades, and I'm pretty consistent with what I do. So I'm confident in the signals that I teach with. And the most important thing about this model is that it's really easy to spot. So I believe it's very, very easy to make this your model, just because of the characteristics. It's like, for example, very rule based. So you're always looking for either a discount or a premium market. You are specifically focusing on PD arrays such as the bullish order block, or for discount buys, bearish order block for discount sells. Premium sells. You're looking for breakers, or you're looking for order block fair value gap formations. So just how you see here in this chart. So I have my annotations off. This is the Bitcoin daily chart. I call this trade in real time, and you guys can take a look at it. I'll turn on my annotations here and on in just a second. Okay, so these are my annotations. Go ahead and zoom out a little bit. As we can see, we formed this last up close candle on Monday the 12th of September. We got a little wick up, then we have some strong displacement lower. And then the next day we have this little small doji formation. What did this give us? This fair value gap here. So when we saw this fair value gap form, we'd be looking for anywhere for short sells. So this will also be a lesson on fair value gaps. We'll send that out in time, and I'll actually change the color of this top line so you guys don't get confused here. So as you can see, from this candle's low down to this candle's high is our fair value gap, coupled with a bearish order block. This is our high probability zone. So a lot of people ask, if the range inside of a fair value gap is large, what part of the fair value gap is the part that I use? This is a big question. I get this question a lot. people are always wondering, what part of this fair value gap is the part that I need to use, or the most significant, or where can you find the most sensitivity? And I always say, focus on this model. This will make everything a lot easier. So if you are able to anchor, let's say we anchor the Fibonacci from this candle's high down to this candle's low, we extend that out. This would be our daily dealing range, meaning we are trading inside of this candle's high and inside of this candle's low. So this is our dealing range. As long as we're not breaking anywhere above this high or anywhere below this low, this is our current dealing range. Now we can have many different dealing ranges depending on your time frame, but from a daily time frame perspective, this is our dealing range. So we are consolidating, we are building liquidity here, we get a sharp move up here, and then we trade lower. We take out the sell side, but not anything significant. These are still relatively equal lows. We start consolidating a little bit more, and then price decides to take out the buy side. So these are these last two highs here, and we are now trading up into a premium. So anywhere, and if we trade into a premium, it's above 50%. So for this model, you're trading even a little more above the 50%. So you wouldn't be looking for any short sells at 50%. This is the optimal trade entry. So the way the optimal trade entry is taught, in the nature of the optimal trade entry, is you're going to enter at the 62% retracement. So when I anchored this fib from this high down to this low, our premium market is inside of here, anywhere from the 62% retracement up all the way up to the 79% retracement. And as we can see, price trades up into a premium. We get the 70.5% retracement. Then we break down here. We straight get a strong displacement lower, strong move, take out the sell side liquidity at 18,000. So this is the model. If you're not comfortable with these daily time frame entries, you can always wait for your confirmation entry, and I'll go ahead and explain that. So this is our highest area of sensitivity here, where we got this move, the 70.5% retracement. Say you were a swing trader, you would be in at 62%, and your stop loss would be placed above the order block's body. So this is the body of this last up close candle. So this is the close. So your stop loss would be placed either above this or above this little wick here. If you want to make it extra safe and you want to sacrifice your risk reward, then you can always put it above the swing high. I personally believe that's not necessary from what I've tested and what I know works for my model. I always place it above the order block, or in case of a buys, I'll place it beneath or below the bullish order block. So as we can see here, price trades up into a premium. We're already a premium here, but wasn't enough. Price wanted to dig in a little bit more. So potentially, say if you were jumping in at 62%, you would be in on this candle, and you would just have to wait and let it play out. This is the daily time frame. Remember, these moves take a long time to play out. So we'd be consolidating inside of this premium, and we get another sharp move up, take out the buy side one more time, and then when we got that sell off. But if you don't want to do that, if you want to be a trader that is more of a confirmation trader, you can always go down to your lower time frame, say for 4 hour, for example. Let's go ahead and zoom out a little bit. Go down to 1 hour chart. So this is the price here is digging up into this order block, or I'm sorry, the premium. So typically here, what you'd be waiting for is this type of formation. You guys have seen me, if anyone here is in the Telegram, link will be in the description. For bearish setups, we'll get a swing high, then we'll get a swing low formation, we'll get a higher high, then we'll get a lower low. That's our break-in market structure as soon as this swing low is broken. So we'll be waiting for a retracement up into a premium, lower time frame premium in this case. And we'll be looking to enter here on a fair value gap or order block, breaker, whatever PD array you are comfortable with. I personally trade all three: breaker, fair value gap, order block. And you'd be looking for price to sell off. So as we can see here, we're trading up into a D premium. This line here, the blue line, is the 70.5% retracement. So we form our first swing high, then we form our first swing low. So this is our swing high. Then we form a swing low here. This is our swing low. Then we form a higher high. So if we can break the market structure, you'd be considering this as a run on stops. So as soon as we trade higher here, we come down, we get a strong displacement lower. This is a sharp move here. Once we break below this low here, we get a shift in market structure or break in market structure. So we form our swing low. So this is where you can anchor your fib. So you're going to anchor your fib from this candle's high down to this candle's low and extend that out. Price comes up. Which one is our bullish order block? I mean our bearish order block, sorry about that. This candle here, this last up close candle before this move down. You wouldn't consider this. Why? Because of these wicks here. You're looking at the candle with the biggest body. This has the most volume in it. So you'd be anchoring. So we'll go ahead and mark out the body, so the opening price. We'll extend that out. We can see price trades down. We get a strong displacement. Comes up. So what is this? From this candle's low down to this candle's high, we'll actually mark that out first. This is our fair value gap. We can see price comes up, fills in the fair value gap completely, trades into this bearish order block. That's our bearish order block. 79% retracement. Pretty much almost to the point exactly. Then we get a strong move down, come back into the fair value gap, and we can see price is respecting the high end of that fair value gap, is respecting it. We're still kind of consolidating. We come up. What is this? This is our premium, 50%. We get a strong reaction here at the 50% and trade lower. Show you guys another optimal trade entry. Same thing. Look at this swing candle, swing high on this last up close candle before this move down. We anchor this down to the swing low, which is this one here. We wouldn't take this one for reference because we went lower. So when you're drawing out your fib, sometimes you'll have to redraw it. So as you can see here, this didn't quite reach the 60%, but you'd be looking for this swing low here, because this is our This is our lower. We're gonna take this as our lower low because we went lower. If this is the swing low, then yeah, our fib would be fine there. But since we didn't get that low, we came down here. I'll show you guys what I mean. From swing high down to swing low, come up, 70.5% retracement. What is this? From this candle's low, extend that out to this candle's high. Same thing. Fair value gap coupled with, what is this? Bearish order block. As we can see, price comes into that, is respecting the fair value gap. We fill it in, come down, come back up one more time. The midpoint, that mean midpoint or consequent encroachment, which is the midpoint of this fair value gap. And if we can see, price is now it's touching the lower end here. One candle, two candles, then we get a sell-off here. So many trading opportunities for this Bitcoin sell-off, and this is all anchored on the higher time frame. And remember, we are on a daily time frame, so we had one potential hourly setup. So if you are a swing trader, that's fine. You can find setups on the hourly chart. One more. Well, there's actually many more, but I'll show you one more example here. This is our swing high. What is this? Bearish order block. Strong displacement lower. We're gonna anchor this to our swing low. This swing low here. Extend that out. 70.5% retracement. We go ahead and delete these so you guys don't get confused. 70.5% retracement to the point. Perfect delivery. What is this? Our swing low. This candle swing high. This is our fair value gap. So as you can see, you have this large range in here. And like I said earlier, which part are you going to use? Your safest bet and your most probable, your highest probability trade is going to be at the 62% optimal trade entry. You guys that are in the Telegram, you guys see me trade this live every single day. It's very consistent. I have a high win rate, and this model repeats every single day because this is literally the nature of the markets. This is how they book daily, from premium to discount and from discount to premium. That's all this algorithm does. So as you can see, swing high down to swing low, 70.5% retracement. We are inside of a premium. What is our model, or what is our PD array that we use? Bearish order block coupled with a fair value gap. This is our high probability entry. 70.5%, and then price trades lower. Pretty simple. It takes time to train your eyes to see this, but in time, I think you guys will enjoy this model. It's very consistent. You guys have seen me trade it. Hope you guys enjoyed this one. Like and subscribe, and I'll see you in the next one.